Today, we're going to be joined shortly by Julia Lee from Burman Invest and also now Jason McIntosh from Motion Trader. Jason, how are you, sir? Stock of the day, I suppose the bigger one to talk about is the Telstra result. What did you think of it?
Hi, David. Yeah. Look, I think it was a really solid result. It's a case of, look, I think it's really all about a case of the company delivering on what they said they've been going to do. So if we go back to June 2018, they announced their Telstra 2022 initiative, or T22, and that was all about simplifying the operations and the products and reducing that cost base. And as of today's result, management have said that they're 80% of the way to either completing or on schedule to complete all those initiatives. So I think that's a really big positive for the company.
Okay.
And
Jason, just hold that thought because we've got Telstra Managing Director Andy Penn on the line joining us. Andy, welcome to the program and to ausbiz. Market's loving this result. Share price up to a 2-year high as a result. What were the highlights for you?
Yeah, no, look, thanks very much, David. And I was just hearing Jason's comments as well. So thanks to Jason. I think, and Jason really put his finger on this, is that what we're able to demonstrate today is that we're at a turning point. Obviously, the transition to the NBN has been a major headwind for Telstra. We've been responding to that through T22 program, which is a radical simplification, as Jason mentioned. And what we're able to point to today is our EBITDA in the second half of the year increased compared to the first half. We gave guidance for next year, which implicitly puts EBITDA growth in the mid to high single digits. We delivered a net profit after tax increase of 3.4% and an earnings per share increase of 2%. And that on the back of the strengthening of the balance sheet that we've done, the setting up of our infrastructure assets, the deal we did recently on towers, and also even the deal that we did this week where we bought Medical Director sets us up for growth in the future. We'll be talking to the market more about that in the coming weeks.
I think that's the thing that has struck analysts is the confidence in next year. Like, we're getting very little guidance for the next 12 months from any of the major corporates at the moment. Your guidance really reflects the confidence you've got that you've been able to deliver on this structural reform within the business, despite what happens in the economy.
Yeah, look, I mean, we're lucky, David. I mean, in that obviously the nature of our services, the last 12 or 18 months is highlighted and reinforced the need for them. Doesn't mean to say, by the way, we've benefited financially. We've absorbed about $600 million worth of EBITDA impacts as a consequence of COVID, but it has reinforced the criticality and the importance of connectivity. And so, we're confident about demand. And we're confident that the steps that we've taken through the program that I've referred to, which is around simplification and digitisation, our cost out program, we've taken out $2.3 billion already. We'll be at $2.7 billion by the end of this year. All of those things give us confidence on that trajectory which we guided to today.
Yeah, certainly remote working plays into your sweet spot, doesn't it? That's for sure. We're all using more data. How important, you're nearly to the end of your 4-year T22 plan. When you first announced it, the markets were going, oh yeah, here we go, another plan. Will Telstra deliver? How important was it for you to show to the markets, yes, this is a company you can depend on delivering what they promise?
Oh, look, crucially important, David. You put your finger on it. I mean, in the end, it's all about building trust. You're building trust with customers, with your people, and critically with your investors as well. And I found the investment community, if you can build trust and deliver for them, they'll give you the support and the latitude to go and, develop strategy and make investments. But you've got to be able to build that trust. And that's really what the T22 program is about. It's about doing what we said we would do and delivering. Now, not everything's in your control. Of course, there's things that happen. COVID happened. Bushfires happen. They impact us. But if you're delivering what you said you would deliver, then the market is, I think, incredibly supportive.
Yep. You also mentioned you're seeing green shoots in some of our growth businesses. Which are the most important ones for you? Where are the green shoots that are really focusing your attention?
Well, the biggest engine of our business is clearly our mobiles business. That's been helped by virtue of the 5G accelerated rollout that we've been pursuing. We saw EBITDA in the year up 170 million in mobiles, but actually in the second half it was up 290 million. So that's been turning around. So that's been crucially important. Our health business is starting to become, very strategically important. It's not big in the scale of Telstra, but strategically it's incredibly well positioned. And we've announced two major acquisitions recently: Power Health and Medical Director. Our network services, what we call it Telstra Purple. It's really things. This is sort of stuff around cloud computing, cyber security, Internet of Things, those types of services for enterprise customers. That's an important part of our business. We're also will be formally launching our energy retail business soon, because we're already in very many homes in Australia with our telco services, and we find that and we've got confidence that customers will happily buy their energy services from us, and so we've been doing a lot of work on that over the last years.
Give us an update on the Digicel Pacific takeover. Is that important going forward?
Well, I can't say too much more given the nature of the discussions, to be honest, David. But what I would say is that firstly, the discussions aren't complete, and it doesn't. Therefore, it's not certain that we will necessarily proceed. But if we do, it will have to meet key financial criteria. We'll be the minority of the equity. We'll own the asset, but we'll be the minority of the financing. The rest of it is coming from other sources which are non-recourse, and we'll have appropriate risk protections in place. So that's probably as much as I can say for now.
Okay. All right. As one of Australia's biggest employers, your view on workplace vaccinations, mandatory vaccination, do you have a policy on that or a view on it?
Yeah, certainly I have a view, David. Firstly, I am absolutely pro-vaccination. Vaccinations have made our society the safer place that it is today, whether it's cholera or typhoid or tetanus or polio. Vaccinations are really an important part of the healthcare system. I don't think you can force any individual to have a vaccination, though, because obviously you need to take into account their individual medical circumstances. But there's no doubt there are people in the workforce, our workforce, such as people in our stores or field techs, that come into lots of contact with lots of different people every single day of the week. And it's important we make sure that they're safe and our customers are safe. So we're working through the complexities of how we can give direction in that regard right now. And I've made a commitment that I will speak to our employees when we've basically worked through that. And we're consulting with government on it as well at the same time.
Okay, so you're looking to the government for a bit of guidance as well. You don't want to be stuck in this mire. You want them to sort it out, don't you?
Well, no. I'm not saying that, David. I'm saying that they're an important stakeholder, as are our employees, as are other people. So we're consulting. It's a complex landscape, as you know. There's privacy considerations, there's liability consideration. But the most important thing is, how do we get to the best advice and the best health care and safety for our people and for our customers as quickly as possible?
Yeah. Andy Penn, I know it's a big day on your calendar and you've got lots of obligations. Really appreciate your time and here on ausbiz. Thanks again.
No, thanks for giving us a voice, David. Really appreciate it.
Good on you. Andy Penn there, the Managing Director of Telstra. Let's go back to Jason McIntosh at Motion Trader. Jason, pretty buoyant, Andy Penn, and just getting your thoughts on Telstra rebuilding their trust with analysts and the markets, because I do remember, 3 years ago when they launched T22, everyone was going, oh, here we go again. Telstra, another big reorganisation. Will they deliver? It looks as though they are.
Yeah, it's such a good point, because so often we see and we hear companies coming out, and not just companies, could be government, could be anyone. We come out, we hear these big plans for the coming years, and they make a headline, and then their time goes on, and they're just quietly forgotten, and we don't hear about it again. So it's really good to see a plan that was initiated back in 2018 being talked about now in 2021, and seeing, look, we're 80% of the way there. I think it's great. It builds a lot of credibility about what the company's doing, who the company are. So when they come out with these forecasts for EBITDA for the next couple of years, you go, well, hey, they're big targets, but they're
Yep.
but they've got a history of delivering. They've got a track record. So I like that. I like that a lot.
So two-year
And
high on the share price today. Would you be buying Telstra shares?
yeah, it's look, it's this stock triggered my momentum indicators in, I think it was in I think it's around February at around $3.20, and it's been trending nicely higher since then. And so look, the trend is very much up for this stock, and I think particularly with that share buyback they're doing, that I think that's going to underpin the share price and help fuel the momentum over the coming months. All that said, when $4 is actually a bit of a key technical level for the stock. So if you call up a chart of Telstra pretty much since it listed, and you just look along that $4 line, there's it often causes some sort of reaction to the share price when the shares hit $4. Sometimes the reaction may last for a few weeks or a couple of months or just a pause. Other times it's caused a complete reversal in the trend, like it did in 2019. I don't think we're going to see a trend reversal this time, but there could be some turbulence around $4. We're not far. We're only like what 6 cents or so from there now.
That's a perfect example of what you're talking about.
Yeah, well, you can see that 2019 high.
Yep.
You go back even further to 1998, and you can still see that interaction with $4. Often happens around round numbers in the stock market, individual stocks.
So you'd wait,
and
if it broke up through that and stayed there, then that's a good sign.
Absolutely, and
right. Okay.
It probably will, and it may take a few weeks to get through it. But that's a great thing about technicals and charts. You can see that bigger picture view about where there's
good point.
Where things are happening in a stock, and $4 for Telstra. I think we'll break above it, and that'll be a great sign, I think, for the coming months.
Okay. Julia Lee from Burman Investors, also been listening into Andy Penn. Julia, what did you think of the results and Telstra share price at the moment?
Yeah, I mean, over the last few years, you've had the chance to pick up Telstra sort of around the $2.65 to $2.80 level and hold it till it gets to $4, and then it drops back off, and then you can pick it up again around $2.60 to $2.80, and then it usually goes back up to $4. And I guess one of the things that has kept Telstra range bound is that there hasn't been a huge amount of business momentum there. But if we have a look at the update today, it's a very positive update, especially in terms of those mobile growth numbers. I mean, we haven't seen growth like this for the mobile division, where we have seen revenue per unit increasing since 2015. So that gives you an idea of how long it's been since we've really been excited by Telstra on the earnings side of the equation. So the forecast today that we will see growth once again in the current financial year for underlying EBITDA, as well as in FY23, means that Telstra is now in an upcycle. And we know at the end of the day, underpinning price momentum, or the share price, is earnings growth. And Telstra certainly delivered on that today in terms of the forecast. So it's just about meeting that now. And then add into the mix the capital management. We knew that the unlocking of value through tower infrastructure would mean some of those funds will be returned to shareholders. So about 50% of that will be returned to shareholders. So a nice on-market share buyback there, which has helped to boost value as well. $4 is a key mark, but given the earnings momentum that now appears to be in the business, I'd expect it to break that $4 mark.
Okay, so you've got it as a buy at these levels? Okay.
Yes, it'd be a buy at these levels. Usually, Telstra would be a sell around the $4 levels, but given the update today and the forecast growth in both the current financial year as well as the next financial year, that should underpin strength in the share price.
Yep, and as we were talking about earlier, that confidence from the market that here's a company again building a reputation of delivering on what they promise can't be underestimated.